got a very full house today. Good afternoon, I'm Kate Seeley, Vice President of the Middle East Institute, and thank you all for joining us today for the discussion about the economic challenges faced in the Arab countries in transition following the Arab awakening of 2011, with a focus on Egypt and the very dire economic situation that Egypt faces. As we all know, the demands for greater economic opportunity that really pushed the demands for change in many Arab countries have not only not been met, but have faced a setback. In Tunisia, Egypt, and Yemen, GDP growth is down, investment is down, tourism is down. The only post-Arab Spring country that is experiencing any positive growth is Libya, where the IMF predicts that in 2013 growth will increase by 17%. Of course, by contrast, nowhere is the economic situation more dire than in Egypt, where 2 years of turmoil have drained foreign currency reserves to a critical level, just $13 billion, and where the value of the pound has fallen by more than 8% against the dollar since the start of the year. And that is why an IMF loan to Egypt is viewed as so critical, and yet it comes, as so many loans do, with conditions and measures that are often very politically difficult for governments to implement. And hence today's news that Egypt will invite an IMF technical team to begin renegotiating their $4.8 billion loan is a very positive development. Here at MEI, we wanted to better understand the crisis that Egypt is facing and the steps and reforms needed to avert disaster. And because many of these countries in transition share the same challenges, we thought it would be useful to step back and take a broader look at the missteps and miscalculations taken elsewhere, such as in Tunisia. And to do so, we've invited two individuals who between them have decades of experience examining MENA economies. Both have worked at the IMF for quite a long time and bring a very unique degree of expertise to this topic. Andreas Bauer is the IMF mission chief to Egypt and the assistant director to the Middle East in the Middle East and Central Asia Department, where his division covers not only Egypt, but Jordan, Lebanon, Syria, the West Bank, and Gaza. Mr. Bauer joined the IMF in 2000 and has served in several positions there. Prior to his career at the IMF, he held senior positions at the Ministry of Finance in Chile. Dr. Zubair Iqbal retired from the IMF in 2007 after a 35-year career there. He too served as assistant director of the Middle East and Central Asia Department and held many other positions during his long and prestigious career there, including serving as senior advisor to the Saudi Arabian executive director to the IMF. While there, he wrote many books and articles on the region, ranging in topics from Islamic banking to macroeconomic policies in the Middle East and North Africa. He's also an MEI adjunct scholar. So thank you both so much for joining us today. It is a great privilege and an honor. We're all looking forward to the conversation. And I'm going to begin by inviting Zubair to the podium. And please note you have lots of water.
I definitely going to need it. Given the fact that conditions in that part of the world can make anybody go crazy. And for the wrong reasons. For the wrong reasons, not for the right reasons. Any democratic rebellion or revolt or whatever you may call it is usually a function of both political and economic considerations. One may be a necessary condition but not a sufficient condition, because you need both of them to mesh together at a critical moment for shift from an authoritarian to a democratic process. It can happen peacefully if you are very lucky, or it has to happen in a rather difficult way, especially if the elites are not willing to give in. In the region, it's very interesting to see that different countries that were affected by the Arab Spring had different levels of political and economic constraints. And therefore, some of them went through a violent change, while the others transitioned in a somewhat more peaceful fashion. Those with lots of money, lots of resources, like the GCC and the oil-producing countries, it was easier for them because they could address the challenges by throwing money at it rather than worry about change in the institutions. Basically, what you need for any rebellion to take place, you have to have severe deterioration and income equality, increase in unemployment, elimination or repression of middle class, and finally, existence of a global system that allows very easy transfer of capital and other financial resources out of the country, which then makes it easier for the elites to run the place as they wish to, because they know that they have an access to an external environment where they'll be able to transfer their resources and live happily ever after. In the case of the Middle East, 3 or 4 countries clearly met this very important criterion. Economic income inequality was very bad, unemployment was growing, and third, the external positions were very propitious. These included Egypt, Tunisia, Yemen. And all 3 of them encountered a very significant and violent transition because the elites were not willing to give in because they didn't need to give in. The point that I'm trying to make is it's very easy to pick on the economic factors and assume that that's what causes the problem. That's not the case. A political consideration has to be in the picture for something like this to happen. If institutions do not exist which allow the various interested groups or parties to be able to express their point of view and get it across in order to change policy appropriately, it's going to lead to an authoritarian change. So one authoritarian regime typically is replaced by another authoritarian regime with the trappings of democracy. Now, it's easy to bring about a revolution like this. What happens after that is what's important. In the Arab Spring case, the 3-4 countries that I've referred to are the ones where economic conditions actually dramatically worsened after the so-called revolution. Several reasons for this. The most important reasons are institutions didn't exist which could transform grievances of people into action. So there was disappointment because of no quick fixes after the revolution had taken place. And the second issue, which is I think more important, is that the new political regimes that came into power in these countries were too busy trying to consolidate their political position rather than look at the economic malaise that had been created by uncertainty, lack of policy action, as well as the resumption of capital flights out of these countries. It's important to note that these countries were already encountering a declining growth process because of the slowdown of the global economy, particularly the European Union. These countries are very close, especially Egypt, Tunisia, Libya, and others were very close to the European Union. There were close inter-trade relationships which were already slowing down and were causing slowdown in growth. In a circumstance where growth is slowing down and inequality remains in place, you got a prescription of an explosion. When these governments came into power, they were too concerned with, as I said, establishing political cohesion, strengthening their political position to be able to rule, and therefore they took their eyes off the economic conditions which had started to worsen. Not simply because there was inertia in economic policy domestically, but also the external forces which had reduced the impetus for growth. Now, what did the governments do? Well, even before I get to that, let me try to see where did things stand in 2012. Growth in that region, in the countries affected by the Arab Spring, was about 5%, 5 to 5% on average for the previous 4 or 5 years. That fell to 2.5% per year, which was barely enough to meet the rising population in the country. Second, because these countries, there's no cohesive policy in place, How did they respond to the demands of the people? They responded by increasing untargeted subsidies, ostensibly with the purpose of reducing the burden on the poor. These subsidies were basically for energy and for food, and for the private sector, which in fact, instead of reducing income inequality, increased income inequality. Governments did not have the resources. The tax base had fallen because of the slowdown in the economy. At the same time, spending had increased. And by the way, many of these countries increased their minimum wages, which raised the cost both of the government as well as the private sector. In the process, the budgetary deficits increased, which were then funded by borrowing from the banking system, which allowed the inflation to go up, create uncertainty with respect to the external position. Balance of payments started to deteriorate dramatically. They started to lose their reserves, and the currencies started to depreciate. Unemployment actually increased. In some of the cases, for example, in Yemen, of course, the real unemployment rate was 30% to begin with. It went up to 40%. In the case of Egypt, my friend Andreas will talk more about that, it also increased. We know Tunisia, where the unemployment rate increased by 5 percentage points over this period of 1 year. What I'm trying to emphasize is, these countries, by not taking decisive economic action, and by just doing palliatives in order to, quote unquote, satisfy those who had rebelled against the previous government and the previous regime, actually worsened the situation rather than help it. What happened? Government policy being as ineffective as it was, budget being as dysfunctional as it was, led to market conditions becoming uncertain. Confidence fell. Private sector capital flew out of the country. Foreign direct investment that used to come to these countries very significantly declined dramatically. In the process, private sector growth became negative in large number of these countries. With the result, unemployment in the private sector also increased, and the government tried to compensate for it by hiring more people, which was the worst thing that you could do under the circumstances. What do we have? We have a situation where the budget deficits in all these countries, to varying degrees, have worsened. Unemployment has increased, inflation is growing, and at the same time, balance of payments position is worsening, and the external inflows are contracting. A prescription of a perfect storm. How do you handle it? Became an issue. When we take up Egypt, I think you'll get a very succinct idea of what can happen or what should happen if you let economy go astray and you do not adjust your policies the way they need to be after this kind of a crisis. In any case, let me look at, in the short term, the balance of payments position and the overall macroeconomic position worsened. The long-term growth prospects weakened because there was uncertainty, there was lack of clear-cut policy, and the sustainability of that policy package. Everybody is now sitting on the sidelines waiting for the new policy structure to develop, for them to take an action with respect to investment, with respect to movement of capital, as well as with respect to whether they're going to stick around or not. At a time when in these countries, the skills that are available are not only they're not adequate, but they are inappropriate for future growth. So the long-term outlook remains as bad or perhaps worse than it was in 2009, 2010. What could they have done? What should they have done? What could they have done to address these challenges? Very difficult question to answer, because we can objectively say what they should have done. The reality is they needed to create an environment to be able to do it. They never thought about creating that environment. How do you bring the various political interests and groups and elites together on a common platform in order to implement a policy which would be considered as broadly acceptable? Because that's the basic issue. If you just increase, for example, subsidies on energy, who benefits from that? The rich, not the poor. The poor were the ones who were demanding action, not the rich. If you were to raise minimum wages, what happens? The demand for labor falls. The private sector closes down. So what needed was, in these societies, was to bring the various groups together with different interests and come up with a common position, some common platform from where which you go. How it was supposed to have been done? First of all, what was essential was come clean with people. Be honest with people and tell them where they are. What are the conditions? How things are going to change and what sacrifices they'll have to make. Nobody attempted to do that because they didn't have the courage to do it. And that is because the new leadership not only was not experienced enough to understand this issue, but also, and perhaps more important, didn't have the skills to do it. The previous institutional structure had broken down. No new institutional structure had developed. Bureaucracy was waiting on its hands for instructions to follow. There were no instructions coming forth. So the result was, even where obvious actions and decisions could have been made, were not made. And nobody was willing to go ahead and tell the people what the reality was. Then the second question was, develop a broad-based program which addresses the short-term problem, which is the macroeconomic issue, and then look at how are you going to restore growth in the society, in the economy, through structural adjustment reform measures, which would fix the prices, stabilize the exchange rate, improve the resource allocative capacity of the market system, provide confidence for investors, both domestic and foreign, so the capital inflow could start to take place, and generate, this is very important, a fiscal space in the budget to be able to undertake investment for infrastructure development and therefore establish the basis for growth in the future. What could they have done in the short term? Very difficult question. And I'm sure when we talk about Egypt, the tensions associated will come out. The point is, we can talk about the need to reduce the fiscal deficit, reduce the credit growth to the government in order to be able to transfer the credit to the private sector for the private sector to start investing and grow. Create a confidence level by making sure people believe in the policies that you're implementing. It's a tall order. It's not easy to do. How are you going to do it unless you have the support of a broad constituency in the country? In other words, for any economic action to take place and be successful, there has to be a political support for it. For political support to be there has to be an economic action which will allow for an improvement in the economic conditions down the road. It's a catch-22. If you do one and wait for the other to happen, it will not work. What you need to do is to work on both at the same time. For any new government coming into power without any experience of governance, it's going to be bloody hard and difficult. And that's what came to pass in all these countries, and the changes that you see and the revolt that you see on the street in places like Egypt, Tunisia, and Yemen points to the fact that the new governments that have come into power do not have the capacity to implement measures that they know and understand have to be taken. There's no mystery about the measures. The mystery is about how do you implement them. What kind of political support do you need? How do you create the political support in order to move towards economic reforms, which will clearly worsen the economic conditions for the common man in the short run before making it better in the future? How do you sell it to the common man? How do you make the common man understand that this is the natural process things work in? Their experiences. Poland is a great example. But the common man is not interested in the example of other countries. They're interested in their daily life. How do you do it? It becomes a major issue. So one challenge that remains for these countries is, how do you create the political environment to take the difficult economic policy making? And then, at the same time, can those difficult economic policy measures be taken effectively so that any consolidation or any creation of that constituency will last, as it happened, for example, in Chile, as it happened in Brazil, in Turkey. Now, the short run is a problem, but the answer is there. You dramatically reduce the fiscal deficit while shifting your subsidy, reduce the subsidies and shift the subsidy composition in such a fashion that only goes to those who really need. And it can be done in the short term. You don't have to wait for the long term to do it. One. Number two, go after taxes. There are a large number of very powerful interest groups in these countries who do not pay taxes. It's their privilege. They just don't want to pay taxes. You have to go for that and mobilize resources. For that you need political support, and you need support of those who are interested in the longer term growth of the country. After you have done that, then you move towards structural reform measures, which will take 5 to 10 years for these economies to come back on, given the external constraints. The external constraints are not going away. Europe isn't going to grow fast enough for these economies to be pulled up because of Europe for the next 3 to 4 years. So you have to change the model. You have to look inwards. How do you look inwards becomes an important issue. And there, the external forces, or what I call the global village, comes into the picture. How does a global village work for countries like Tunisia or Egypt or Yemen? The point is, if globally commitment of a substantial amount of resources can be made, subject to action within the countries, to be able to not only mobilize their own resources, but to fix their policies. Every allocation of external financing will have to be conditional to what these countries do within their countries to be able to get over the need for external financing or external support over a well-defined period, maybe 5 years, maybe 10 years. But the amount of resources that require are huge. The latest estimate was before the crisis, January-February crisis in Egypt and in Tunisia, was about $75 billion over a period of 3 to 4 years for the region. It's probably over $110 billion now. It's a substantial amount of money when you think about it. When you compare it with the sequestration in the United States, that's only $86 billion. So you can imagine what's the magnitude of assistance required. But the most important thing is, as it was done in the case of, for example, Chile, or as it was done in the case of a country like Brazil, every penny has to be conditional, number one. Number two, you have to insulate the reformers from political action or political interference. Chile is a great example. Use that for that purpose. Even Turkey is a good example for that. Indonesia is a good example for that. But what is important here is to remember, action has to be domestic. External financing has to help domestic effort to succeed. If domestic effort doesn't take place and external financing continues to take place, these countries will be worse off down the road because they'll be stuck with a much larger debt in the future, and the capacity to repay that debt will be lower than it is today. Therefore, it is very important that when you talk about this partnership, for example, of external reformers and the domestic reformers, you'll have to face a lot of challenges, but you have to do it. How do you do it will differ from country to country. Tunisia, perhaps, is the farthest gone in that direction to build up this relationship. Hopefully it will work, and hopefully it will show the way to the other countries to do it. Point is, what model should we choose? The model that I can think of, and that perhaps represents my background, is where domestic action precedes external finance. Choice of selling it to the people, explaining to them the consequences of not doing the right thing, and then let it be. But remember, unless you removed controls on capital in the country, remember, unless you allowed market-based prices to work and function, which would then mean reduced government intervention. It's not going to go anywhere. Good luck. That's all I can say about these countries. Thank you.
Well, thank you very much. Zubair has given an excellent assessment of the situation, the challenges. And I guess what I'll try to do is just to put a bit more focus on the situation in Egypt and also what the role of the IMF has been. Let me start maybe in just summarizing the three or four key messages I want to leave with you. I think the first thing that is important to recognize is that when 2 years into the revolution now, Egypt's economy remains still under substantial stress. And on the positive side, the country has, in this period, preserved more or less stability, macroeconomic stability. But at the same time, the financial fragilities have risen, and really we're still away from seeing a broad-based economic recovery. That has still to set in. Second, the economic and financial problems that Egypt is suffering are partly cyclical, partly related also to the political cycle, but they're also to a substantial extent structural. And the implication of that is that just muddling through or just making progress in the political transition, while important, is by itself not sufficient to address really the difficulties that the country faces. And what the country really needs is to reach a sustainable situation going forward are really substantive reforms in a number of areas. From our perspective, especially in the fiscal side, but that I think is a key realization. The third point, from our perspective, really kind of a robust strategy to address the economic financial difficulties, about which I will talk a bit more later. A strategy to address those probably needs at least 3 pillars. The first pillar is really a macroeconomic program for the short term to preserve stability and to begin addressing the main imbalances the country faces, and especially this is the large fiscal deficit and also the balance of payments deficit that has been a key factor over the last 2 years. Second, beyond that, really there needs to be also some sort of medium-term roadmap to address these structural challenges that I just mentioned before. That has to do with issues of medium-term fiscal consolidation. It has to do with issues of improving, in that context, the quality of public spending, to rethink the role of the public sector in the country. On the monetary side, which is close to the IMF, of course, putting in place really a modern framework for managing monetary policy and the exchange rate. And then a lot of sectoral issues, the business environment, energy, social policies, etc. So there's a big amount of work to be done in that area as well, really to move on. And then third is the role of external financing. In the current circumstances, really, Egypt has traditionally been rather reluctant to engage in external financing, and in fact the external debt is fairly low. In Egypt, it's only about 15% of GDP, but in the current circumstances, really, there's a lot to be said. There's a rationale for mobilizing external financing because it can help smooth the adjustment process that has to happen. With external financing, some of the pressures that we now see domestically can be limited, and therefore it can allow for, you want to say, more politically and socially compatible adjustment. Now, these 3 pillars, of course, there's a precondition for that. Nothing can succeed without a certain measure of political stability, and also fairly broad stakeholder buy-in. because the reforms are difficult, and with strong resistance we have seen it is very hard to move forward. And this is, of course, one of the key difficulties that Egypt faces. Now, fourth kind of big message here is about the IMF. We've been heavily involved and engaged in Egypt from the first day after the revolution, and at this stage, mostly by providing policy advice and by providing technical assistance. We remain committed, of course, to support Egypt in the period ahead, including financially. And of course, what the financial support requires is precisely the authorities can put together a robust plan to address the challenges that we see, and also to build enough support so that the policies can be implemented. Now, next few minutes, maybe I just try to talk about a few things here. First, let me just briefly touch on what was the situation in the run-up to the revolution. Just a few elements of that. Of course, many of you know this very well. Second, I want to drill down a bit more about how the economy has behaved, what the performance was in the last 2 years, and then I spend a few minutes on talking about the current challenges and the way forward from here, and what the IMF thinks we can do. Now, just a minute on the run-up to the revolution. I mean, as Zubair mentioned, the region wasn't doing bad, actually, and the same can be said, at least from certain perspectives, for Egypt. Egypt experienced in the second half of the last decade what we call a growth spurt, an acceleration of growth, and that acceleration was mainly driven by investment. Part of that kind of investment drive was probably helped by external factors, especially abundant global liquidity, as we know, until 2008. But of course, also it coincided with domestic efforts, especially reinvigoration of the privatization effort. There was some effort made to improve the business environment. Also, there was financial investment. Interest rates in Egypt were relatively high. The search for yields, it brings people further south, and therefore Egypt also was actually faced with fairly large short-term capital inflows. And it's almost ironic to think that at the onset of the revolution, literally, we had a mission in town that was doing our annual Article 4 consultation, and one of the topics to discuss was how to deal with abundant capital inflows. So that, of course, that report was never written. We still have to write a new Article 4 report, actually. We haven't had a chance to do that, given all the intensive work. But certainly, Egypt was coming from a situation that, from that perspective, was not looking bad. Now, however, underneath, of course, there were issues. And on the macroeconomic side especially, certain imbalances built in that period. And the first one was that it was an issue of competitiveness. The real effective exchange rate, which is a measure of, if you want to say, of competitiveness, had been appreciating for several years, especially because inflation in Egypt was much higher than in other countries. And that contributed to a greater deficit on the trade balance of the current account. Not massive, not in a way that one would kind of clearly see there is, a massive imbalance, but it was building. And second, despite the strong cyclical position, despite the fact the economy is growing fast, really the fiscal deficits did not fall a lot. The underlying deficit was not really addressed, and as a result of that, the debt ratio remained high, the public debt ratio remained high, and it was actually stayed under control partly because of inflation tax. Inflation was relatively high, and that helped in a way with the debt, much of the debt being in domestic currency, that helped to keep the debt ratio stable. But there were these underlying imbalances that were building and not addressed. And of course, on the other side, there's a whole set of social issues in that period. The social story in Egypt is not easy to look at. Our friends at the World Bank have done quite a bit of work if you look at indicators of poverty and inequality, it's not kind of evident that really the situation worsened dramatically. But there were clearly elements that were worrisome. As I said before, inflation was high, and especially food inflation. And therefore, that of course eroded real incomes of households, especially on the lower end of the income distribution. Unemployment, despite high growth, remained relatively high. And there was a sense of, therefore, of lack of opportunities, essentially, despite the positive growth performance. Plus, of course, all issues related to concerns and complaints about integrity that build to these social concerns that happen. Now, as I said, when the crisis hit, essentially, a situation of abundance of foreign inflows dramatically turned around. And maybe one can look at Egypt's economic performance during the revolution, or since the revolution, in two phases. First, there was an immediate phase, the immediate impact. And here, really, what you see, or how we would categorize the crisis, it's what we would call a sudden stop, or even a sudden reversal of the capital account. Egypt, in the several years before the revolution, was receiving every quarter about $2 billion of capital inflows, and following the revolution, every quarter there's been $2 billion of outflows. So every quarter, that means $4 billion difference compared to the status quo before. That's a big shock. And of course, what the revolution did is it created very, very suddenly, very abruptly, a lot of political uncertainty and policy uncertainty. The policy model of the previous of the regime was relatively known, and now everybody was asking, well, what's going to happen afterwards? And the impact of that was essentially a complete freeze in investment. Domestic and foreign investment. Foreign investment in Egypt dropped to zero. Essentially, Egypt was a country that had received substantial amounts of foreign investment, and the foreign investment essentially since the revolution has been zero. Just to illustrate that, plus counting the stop in domestic investment. There was also, of course, the uncertainty created some pressures on the banking system, some deposit outflows. The authorities dealt with that, I would say, with emergency measures. Banks were closed for some time. The stock market was closed. But by and large, after this first phase, which led to a pretty sharp contraction in the first quarter of 2011, the situation normalized after that, in the sense that the economy kind of bounced back after the first quarter and the second quarter, and these initial pressures on the financial system essentially ceased. So the situation more or less stabilized. And this is then when the second phase starts, which is probably just roughly saying from the middle of 2011 onwards, where the economy has essentially been drifting sideways. So the economy has been growing at a very low pace, about 2%, which for a country like Egypt is essentially, on per capita terms, no growth at all. As I was saying before, what's been missing is investment. Private consumption has held up reasonably well, mostly because there's been one factor. If there's been one factor that has been helping Egypt in the last 2 years, it's been remittances. As you know, oil prices remain high. Egypt receives a substantial amount of remittances from the Gulf, and that has helped especially keep up private consumption. But otherwise, the economy has been growing very slowly. Unemployment has been rising from a rate of 9% before the revolution to 13% now. It's 1.2 million people unemployed in addition, in the formal sector only. I mean, of course, we don't really have a good grasp of what happens in the informal sector, but clearly, as a result of this sideways drift, the unemployment situation worsened dramatically. Now, during this time, as the country was moving sideways, pressures on the exchange rates have continued, and really efforts to articulate a policy program, an economic program that would start addressing the problems, did not go very far. They were, in a way, always thrown back by different waves of political unrest, of political uncertainty or resistance, cabinet changes, etc. Now, how has Egypt still managed in those circumstances to be stable? Essentially, they've used buffers that were built before. The big buffer that was there were reserves. Egypt had a fairly comfortable reserve position, 35 billion on the outside, plus another 8 billion domestic banks, so 43 billion in reserves, and that cushion was drawn down. Today, reserves are $13.5 billion, so you can make the difference. Plus, apart from using the reserves, also Egypt has benefited from contributions from some friends, mostly regional partners, Qatar and Saudi Arabia, and this has kind of helped keep a certain degree of stability. Now, what's the short-term outlook? If you ask me today, well, the prospect today is still for a sideways move. Certainly, we don't see yet the conditions for a takeoff. If we take the picture today without any action, and growth is probably going to be the range where it's been in the last 2 years going forward, or even a bit worse than that. And the reason why is simply because the policy and the political uncertainty and that is still hanging over Egypt has not been lifted, and as long as that happens, it's very hard to see how the economy will recover. Now, what are the challenges? What are the challenges? First, as I was saying, on the macroeconomic side, in the very short term, vulnerabilities have risen considerably. The reserves cover, the reserves cushion has been used up to a large extent, and we still have fairly large imbalances. We have a fiscal deficit that was 10.8% of GDP last year. Somehow the standards of how you assess fiscal deficits have shifted since the crisis a few years ago, even in this country as well. I come from a country where we really were at pains when during the Asian crisis, and we had for the first time in 15 years to run a fiscal deficit at all. So for me, a deficit of 10-11% of GDP is a serious matter, especially if you don't have a print-to-print hard currency. So we're talking about a really large fiscal deficit that is there, and this is, of course, what has been happening is that financing this deficit has meant really to suck up the resources from the banking sector. So it's affecting credit availability to the private sector as well. And second, of course, the balance of payments is in deficit. We have no capital inflows, and we have a current account deficit, not excessively large, but still substantial. And therefore, there's a continued drain or call on reserves that then puts also pressure on the pound. So these are key imbalances. These are the two key imbalances that need to be addressed in the short term. And these are the imbalances that really threaten stability and that have the potential to trigger a very disorderly adjustment if they're not addressed. Now, then there's a host of structural issues, of medium-term challenges. Maybe saying before, I think if we think about a sequence of recovery for Egypt, providing a framework for dealing with the most important macroeconomic pressures actually can already help start triggering a recovery, because there is a confidence element there that kind of action on these imbalances would trigger. And Egypt has an output gap now, what we call that, which is there is idle capacity essentially in the economy that can be activated relatively quickly. So just addressing the immediate imbalances would probably help and could help already strengthen growth, increase growth. But of course, growth will have to be sustained over the years. And if we take anything out of the revolution, we also know that the nature of growth in Egypt will have to change in a way. And the growth will have to be more socially balanced, more labor intensive. Egypt has these demographics that on the one side are an opportunity, but on the other side can also be a trap, which is a youth bulge that produces every year about 700,000 people who come on the labor market and from whom you need to create jobs. And just to create that amount of jobs, you need to grow at a high rate, and not only at a high rate, but also have a quality of growth that actually is really focused on creating jobs, and so that itself will need some structural transformation. The issue on the structural side is then really one of competitiveness to a large extent. The potential of Egypt is there. It's the biggest market in the region. It is strategically located. Egypt has access to some advanced markets. It has a fairly diversified economy. But of course, there are many countries in the world that have had a lot of potential for many, many years, and it's never been realized. So the question is how you harness that, and this again brings you then back really to the sectoral policies. We at the IMF look more at the macroeconomic side of that, and I want to talk a little bit about the fiscal part, which is where we're more engaged, but it shouldn't mean that we're just focusing on that. I think there's many structural issues to be addressed on which really our friends at the World Bank and other institutions are more experts on. Education policy, there's an issue of skills mismatch that weighs very heavily on Egypt. The issues of the investment climate, issues of stability of rules of the game, legal certainties. There's an issue of financing, for example. If you look at Egypt, Egypt has grew before the revolution really without credit. Actually, credit to the private sector was declining. There's a problem in financial intermediation that has to be tackled, especially for small enterprises. And on the fiscal side, really, there are a number of key issues that have to be addressed. Not only just reducing the deficit. Of course, the fund is always thinking about deficit, but also on the quality side. If you look at the budget, and I will just leave that picture with you. It's nice. It's four quarters, the budget. One quarter is subsidies. One quarter is interest payments. One quarter is wages, and then you have a quarter left for everything else, including investment. It's very rigid. 3 quarters are hard to adjust in the short term. And second, of course, it's fully allocated. Subsidies create lots of distortions. One of them is that subsidies tend to trigger a much more capital-intensive production structure and labor-intensive production structure, which is a problem for Egypt, because what Egypt needs to create jobs. The subsidy system has proven to be completely ineffective in preventing poverty. Poverty just rose 5 points in the last 2010-11 measure, and that despite these abundant subsidies. Subsidies don't reach the poor, and if they reach them, some reach them, it's very expensive. They are much worse than even just giving a uniform handout to the whole population. So it's something that cannot be afforded, but also creates a lot of distortion. And the size of the public sector, of course, in Egypt is also a question. 1 in 4 jobs in Egypt is created in the public sector. So these are measures that will have to be addressed over the medium term. Now, to end up just with the IMF, as I was saying before, we've been there very intensively engaged. We have a strong relationship with the authorities. There's a lot of policy discussion and advice that happens. We know, of course, that the public view is always the lending, and on the lending, I can say we've tried. We've tried a lot. On many occasions, we were close to kind of having a program that we thought we could support, and for one or other reason, those programs then somehow fell apart. The one thing that we have stressed in our engagement with Egypt is the importance first that the program is homegrown. So what we are saying to the authorities is you need to develop your program. Because clearly, especially in the current context after the revolution, anything that is just being kind of tailored together in, say this, in a laboratory is not going to work. what is key and the difficulty is really implementation, and no reforms will be implemented if there's not really a champion within the government, within the authorities to move forward. So we have emphasized ownership a lot. Now, of course, ownership in a homegrown program doesn't mean that the IMF necessarily can support any homegrown program. Of course, that program needs to address the challenges. But the domestic ownership is key to us, and in that context, the stakeholder support. And you may have remembered, or you may have seen that this was very important to us also in the run-up to the elections, because, of course, a program doesn't have just a projection of a few months. It requires looking forward, and if, to the extent that it looks into a new administration, that new administration has to continue, has to keep on the torch. Of course, broad buy-in is important. We continue in discussions with the authorities. The authorities have indicated to us they are very eager to try and put the program together and get support not just from the IMF but from the international community. And so we're hopeful that in the period going forward, as I said, the strategy to address the challenges can be articulated and that we can be supportive of that. I'll leave it here for now. Yeah.
Thank you so much for those wise insights from both Zubair and Andreas. Why don't you, Zubair, please come join. We'll take the questions from the front. We have about 15, 20 minutes left, and I'll take the prerogative of the floor to ask the first question, and then we'll bundle questions since we have, I think, a lot that people want to ask about. I think, Zubair, you emphasized very articulately that there really is political consensus is needed to get buy-in for very difficult economic reforms. As we all know, Egypt is more politically divided than ever before. The IMF is going to Egypt in this environment where there is no consensus, there is little courage, as was pointed out, and I'd be curious to know from Andreas and Zubair, what is achievable then within this environment? What kinds of reforms specifically are you going to be pushing, and what maybe needs to be put aside, like subsidies, which can be very difficult? I know Morsi has already tried some subsidy-related reforms only to put them on hold a day later under criticism from the opposition. So what's really realistic right now, given the environment?
You take Egypt. I'll take the easier part.
You want to start? Okay, you want to start with specific in Egypt?
Yeah, might as well.
Or you want to start with China? Well, of course, reform and adjustment is never easy, and less so in the current context. And of course, I think we're mindful of that. And we're mindful, especially when we're looking at the options that are on the table. And again, I think there is an objective, which is to reduce, to narrow the imbalances that are not as sustainable. And we cannot go away from that objective, but there may be many ways to get there. And I think we're trying to be very open to see what is workable and what is not workable. And that ultimately is a judgment the authorities have to make. The authorities know the political context better than not. We've done several things here. And I want to first of all, we reach out to lots of stakeholders on the political spectrum, in civil society, the private sector, to try to get a sense also of a broader sense, labor unions, to get a sense, what the sensitivities are and what might work and what might not work. And of course, we have been encouraging the authorities very much to do the same, and they have held, I understand, some outreach in there. Now, on the issue of subsidies, actually, I do think that there has been some movement, and I will tell you what. When I started work in Egypt right after the revolution, and first time I went, somebody took me aside and said, "Don't even mention subsidies. This is end. This is the end for you. You're fresh. Don't even try." And there has been a change, I think, in the perception, and partly that change in perception has come also because the problems of the system and the lack of sustainability is becoming much more visible to the ordinary Egyptian today. If you today a bottle of gas should cost £5, but nobody can find them. This is the subsidized price, but in fact, if you want to buy them, you have to pay 30. So the subsidy ends up in the hands of intermediaries. If you want to buy gasoline today, often, or diesel, there are long queues You can't find it. So the system is breaking down in itself, and I think that has helped. Plus, also, I think a much greater debate about the distributional implications, that really 40% of the subsidy being captured by the richest 10% of the population. So, and I think it has helped open up the mindset, and I think there is actually more room now to undertake subsidy reform. I'm not saying it's easy. Still, somebody will have to pay more, and nobody likes to pay more. But I'm saying is, I think there is more room to move today. The same on the tax side. I think there are areas, the incomes currently they're untaxed, they have no reason to be untaxed. Capital incomes, for example, so where you can make a case on efficiency grounds, but also on fairness grounds, and that are easy to implement. So it needs the effort, the reforms need to be tailored. They need to be mindful of the restrictions. Gradualism is important, but I do think there is room. We know where the space is to make progress, and so on that perspective, I think that there is hope.
Well, you covered everything that I wanted to say, but I'll still say something about it. You see,
good try.
my concern really is not on the development of a policy instrument to achieve the objective. It's its implementation. That's the issue. Experience has shown that in all the countries that reformed successfully, reformers or economic decision makers and implementers were largely insulated from political interest. How do you create that kind of a cocoon that the reformers are protected from political interference for a period of a year or two, so that during that period they put into effect measures which cannot be reversed? And then people will be able to see the consequences of that, and they will create a political support for continuous process of reform. I think there it's very important. Now, subsidy is one of those factors. Taxes is another one of those factors. But at the end of the day, it really boils down to is people ought to see an outcome that will be beneficial to their interests down the road. Thank you.
Let's take a question from the overflow room and then from the audience. This question is from Anna and Neil from the Library of Congress. There are big concerns about the view holding wages down. The country is in enough social stress. Could you please comment on how you envision success at keeping wages down or stagnant, in addition to standard IMF austerity requirements in the pressure cooker social environment, also where discussion of improving productivity? There's one question about the wisdom of keeping wages down, and let's take another question. Nancy, you could please introduce yourself.
Hi, Nancy O'Kane from Freedom House. I have two specific questions. From your deliberations and communications in your missions in Egypt, do you believe that the government has people with the competence actually to implement the policies if they are there? And the second question is about what is the worst case scenario that the public needs to know about if reforms does not take place? Thank you.
The first question was for either speaker and...
Can I take both of them?
No.
Okay, I'll take the first question. Later on, you respond for each first.
Go ahead.
You see, the issue of the real wages is well taken. I'll just give you an example. In 1985, the minimum wage in Egypt used to be about 35% of GDP per capita. In 2010, it was less than 10% of GDP per capita, which basically implied very bad income distribution over time. Now, what has the government done? It came in, it took two steps: increase subsidies in a very non-discriminatory fashion and raise the minimum wages. The consequence was horrendously bad. The point is, somebody has to pay the price for adjustment. It's not going to come out of thin air. What I would do is the following: I would make sure that the subsidies are properly targeted, so that those whose wages are not increasing are getting minimum requirements of their life fulfilled through subsidized inputs like food, etc., etc. Don't touch the wages just yet. Let them increase as the economy starts to grow.
Yeah, I mean, just one thing on the wage. I mean, we don't have a kind of a requirements on wages or anything like that. I think the debate on wages, of course, is related in a way to competitiveness, and Egypt has an issue of competitiveness. But I think more than thinking about wages and what level of wages you set, is more think about what is the productivity of the worker in Egypt, and think about how can this economy create more jobs. If jobs are created, if workers have the tools to be productive, then wages will ultimately rise. So I think, and this is a sustainable way of increasing wages. So I think the focus is, as I say, our mindset is not really set on, how much should the minimum wage be? I don't know. I mean, I think it's very hard to determine what the wage should be. And certainly we're not in the mindset of saying, wages have to be reduced. But what I'm saying is, I think the key challenge is really how you make the average Egyptian worker more productive, and how you make the economy, when it grows, create more jobs. I think this is the key issue. Capacity, the government, Egypt has a strong base of capacity within the government and also in the central bank. I mean, we deal, of course, mostly with economic ministries. I'm less familiar with the sectoral ministries, but Egypt has a big pool of qualified people. I mean, that is not my concern. Quite honestly, as I said, we have a very close and productive relationship. Worst case scenarios is always a bit tricky to think about worst case scenarios. I think what I would say is two things. I think that definitely the macroeconomic imbalances that exist in Egypt today have the potential to unravel into a very disorderly situation, into a very disorderly adjustment, and that is the warning sign. But on the other hand, I also do think that there's plenty of room still there to address these imbalances, to address the problems, to avoid that. So clearly, this is clearly our perspective is the risks of a disorderly crisis, of disorderly adjustment have risen, and it's now about time to address those. But there's also certainly enough room and to do that, and to essentially get out of this situation now in a fairly orderly and positive way, and possibly building also greater potential for the future.
Dave Ottaway, I'm at the Woodrow Wilson Center. I was the Washington Post correspondent in Cairo back in the 80s when they were first talking about getting rid of subsidies, and had 6 exchange rates. My question is, I was there last October, and they were regarding subsidies. They were talking about coupons for the poorest people, and they would continue the subsidies for the poorest people and hand out coupons both for gasoline and cooking gas, etc. My question is, I had the impression that the IMF supported this approach because you almost reached an agreement, or you did reach an agreement in December. But it seemed to me like this coupon system would be a nightmare to implement. And I'm wondering whether you think that's the way to go. Can you implement it? Is that a way to protect the poor and still get rid of some of the subsidies?
Hi, Beth Morrissey with Climate International. I had a question about the health of the banking sector at this point. How much more absorptive capacity do you think there really is for the banks to continue to finance this deficit absent any external assistance coming in?
Do you want to take the coupon and you can take the banking?
Yeah, as I said before, again, ownership requires policies that have a champion and can be and somebody on the other side who will implement it. Really, the idea to move. There are many ways how you can dismantle subsidies. If you look around at experiences in countries, and we've done quite a bit of work at the IMF. We will soon publish just a paper that we did actually on energy subsidies that you might find interesting. You see there's not a single experience. Every kind is a bit different, but subsidy reform is rarely linear. It often takes a few setbacks on the way, and there is not just one single recipe that you can implement. I think many recipes can work, and they depend on the circumstances. the authorities feel very strongly that a coupon system is a system that is politically viable. One of the problems that you have in Egypt today is you don't have really a system of targeted assistance that you could use to compensate those who lose. The issue of targeted cash transfers that have been become very mainstream in Latin America and also in Asia, in the Middle East, have not yet taken hold. And so the question is always in those reforms, if you take away, even though most of the subsidies go to the rich, the poor also receive some. And for them, this is a hard shock, of course, if that support is gone, even if it's very expensive for the government. So the authorities think that a coupon system might work. It's not easy to implement, but it can work. And of course, in this, I think, the ownership is important, and therefore we're willing to go along with it. Of course, our colleagues from the World Bank are providing assistance for that as well. And I think the modalities are still being worked out. Now, Egypt has a system of ration cards already existing for food subsidies, so in the case of the LPG canisters, they can build on that. These ration cards are not well targeted. 80% of the households have them. But it's something that you can start with, and then you can try to narrow later on. On some of the other fuels, it's more complicated. It has to be linked to actually the vehicles and so on, and the authorities are working on that. But again, I think say we're not married to a specific approach. Of course, we want to see the details to make sure it can be implemented. Coupon system could have certain problems, be a bit messy in the way. But if it's that what needs to get the ball rolling, I think we ought to give it a chance.
I wish I could give you a very clear-cut answer on this issue. The reason is very simple. It's a flexible concept. It's a very elastic concept as to at what stage borrowing from the banking system for the government becomes a problem. In a country where the government sets the interest rate as well, directly or indirectly, and in many cases the banks are dependent upon the government activity, there can be a fairly long way to go before they will stop lending to the government. The point is not that. The point is, well before that happens, there will be significant signals for you to start worrying about. Inflation will keep going up, you'll keep losing reserves, and that will in itself create a serious problem for the economy and the sustainability issues. And that will stop well before you get there. That's exactly what I think the IMF is trying to do at this moment.
Okay, I think we've got time for two very quick questions. I've got one from the overflow room. What are the key similarities and differences between Egypt and Pakistan? I presume that relates to the economy and economic reform, but that sounds like a very big question if we could keep that one brief. And any final question from the audience here? Nope. Zubair?
Well, you see, the comparison of these two countries is, I think, inappropriate for several reasons. First of all, the reasons for their problems and the economic challenges are different. One is already so-called functioning democracy, it has institutions, it has got a security issue involved, etc., and that's causing the problem. In the other case, it's very much of an internally created problem, which in the circumstances of very weak political institutions is very hard to handle without stepping on rather sensitive toes. So the point here is, irrespective of whether it's happening in the case of Egypt or Pakistan, solutions are internal. You have to move domestically on fixing the domestic situation. You have to consolidate the budget. You have to make sure that the resource allocation is price determined, market determined. You have to make sure that people are not getting unfair advantage out of their position and therefore disrupting the market forces. If you do that, it doesn't matter whether it's Pakistan or Egypt, things will start to look up.
Well, it's clear there are enormous challenges ahead, and we'll be following the IMF-Egypt deal closely. Please join me in thanking our two excellent speakers today. Thank you, Andreas. That was great. Really great.